Yeah, hi friends. Let's have a quick look at and quick revision about Accounting Standard 28, which is impairment of assets. As you know, this is a new standard. I mean, it was not there in the previous, old syllabus. It is there only in the new syllabus. And it is a big standard actually. Okay. And there are so many points. So let's have a look at it. Okay. I hope this will be useful to you. Okay. Chalo, my dear. Yeah. So, so impairment of assets. First and very basic thing, no? This is obviously impairment. When I say impairment is applicable only for assets, my dear, obviously not for liabilities. If somebody tries to confuse you, no, in the exam or something, yeah, it is not for liabilities. It is only for assets. Yeah. What do you mean by impairment? Impairment in the sense before getting into all that, no, right? So if I say balance sheet, if I put an asset here some asset, let's say some land and building. Okay, I will say some building, one machine, something like that. So building, if I keep it here, 1,000 rupees. Okay, what does it mean by 1,000 rupees of building? What do you mean by? I mean to say, yeah. So it's not that asset. Yeah, asset is obviously there. The asset. What do you mean by 1,000? So from the building, I am going to get. We are going to get. Yeah, what is that we are going to get? We are going to get minimum of 1,000 rupees. Minimum of 1,000 rupees either by way of selling or by way of using it. Yeah, using it, whatever the way. Okay, so I'm able to get minimum 1,000, minimum 1,000. This is important, not maximum 1,000. Fine. So whatever the reason, correct, na? Right? You are trying to say I'm going to get 1,000 rupees from the building. If due to suppose some building has got some issues, okay, so due to some or other reason, if you are not able to get 1,000, sir, it is 1,000 you are writing, but actually you are going to actually, na, if you sell it or if you use it, no, whatever the way you do, sir, now under the current circumstances, it won't cross even 800 rupees. Now tell me, isn't it that your asset has been overstated in the books of account? Correct, na? Right? You are saying 1,000 rupees will come, but actually, if you sell, you will get only exactly 800 rupees. So then, why are you correct? Aren't you actually indirectly cheating, wrongly presenting your financial information? That's the reason the standard has come. So if the amount correct, 1,000 rupees is what is this 1,000 rupees is called? This 1,000 rupees only called as a recoverable amount. Okay, what is this called, my dear? Recoverable amount. So how do you get the recovery? Recovery, I can get it in two ways. What is the two ways, sir? Yeah, this two ways is by way of sale. Okay, by way of sale. First one is by way of sale. Done. And what about the second one? By using it. By using it in the sense what? Yes, sir, I will have an office at this place. Correct. Now I will have my machine in this building. By using the machine, will produce something. Correct. Now we'll be able to produce goods. Our goods, I will be able to sell it. I will be able to get money. Yes, I can get money from the building, from the plant and machinery, from some or other way, or other fashion. So by using the machine also, I will be able to get by way of this. Okay. What do you mean by recoverable amount? How much I will be able to recover? Tell me, my dear. If you have two options, by way of selling, sir, you will be able to get 600 rupees. By using the machine, I will be able to get 800 rupees. Obviously, any person ka choice. What is your choice? Whichever is higher only, na? That's all. So whichever is, what is that by way of sale? By way of sale, that is what we say net realizable value. We will use the word. So what is recoverable amount, sir? Yeah, what is recoverable? What is recoverable amount? Recoverable amount is nothing but first one is okay. What is that? NRV, net realizable value. Next one is equal to value in use, whichever is higher. Yes, NRV is equal to how much you derived? We derived 600 rupees. And what about by using? By using it is equal to 800 rupees. Agree? Right. Whichever is higher. So my recoverable amount is equal to 800. Yes. But if the building value in the books of account is equal to, if it is 1,000 rupees, that means I told you, you have overstated. Is it correct to overstate? No. If you overstate it, obviously, if you remember, I taught you in accounting standard one that doesn't give the true and fairness. Correct? No. That's why. What are you supposed to do? You should not have balance sheet number 1,000 rupees. You have to bring it down to 800 rupees, which is recoverable amount. So what should I do, sir? Yes, you are supposed to do minus 200. Then automatically it will come to 800. Sorry, 1,200 rupees, are you straight away cut from the building? We don't cut from the building. Like depreciation, okay, like depreciation. What is the journal entry? Correct. Now, depreciation ka journal entry, what do you people write? Generally, bookish journal entry people write as a depreciation expense account debit. Okay, depreciation expense account debit to what? To asset you will be recording it. But see, my dear, this is bookish. Okay, this is not the fact. This is no company will record like this journal entry. Only, I mean, in the textbooks it is written like this. Okay, what is the journal entry you are supposed to record? Yes, as per the schedule 3 and as per the no company does it in this fashion. So this is a old fashion, nobody will follow. So what is the correct entry for the depreciation, my dear? You have to write like depreciation expense account debit to accumulated depreciation. Okay, yeah. So some number depreciation expense account debit to accumulated depreciation. In the same fashion, even impairment loss also we are going to record it in the same manner actually. So what do you record, sir? What do you record in the sense impairment loss, impairment expense, or impairment loss? Okay, na whatever it is, impairment loss account debit. Right. So then what do you record? Accumulated impairment loss. IL I am recording. Okay, impairment loss account debit to accumulated impairment loss. Like this, I am recording. Agree? Yes. So how does it represent? What will happen in the financial statements? Yeah. What will happen in the financial statement in the balance sheet? In the balance sheet, how does your asset will be looking at? Say this is a plant and machinery. Plant and machinery is equal to 2,000 rupees. Okay, minus accumulated depreciation. So minus accumulated depreciation is equal to 1,000 rupees. And from there, then what do you do, my dear? That is equal to accumulated impairment loss also minus 200 rupees. That is how you are going to get a number of 800 rupees is going to come to this number. I hope you understood. This is how the presentation in the balance sheet will look like. Agree? Right. Sir, what about this impairment loss? Impairment loss, will you charge it off to profit and loss only, na? Correct. I will tell you that. Okay. Right. Sir, impairment loss. Yeah, impairment loss. Better I will write it as IL now onwards. Okay, na? Right. Impairment loss, what will happen? First, you have to ask one question. What is the question? Are you following revaluation model as per accounting standard 10? Correct, na? Though, so what do I do? I say revaluation reserve exists. Revaluation reserve, do you have revaluation reserve in the balance sheet? Correct now. So for this, what is your answer, my dear? Answer is equal to yes, or answer is equal to no. Agree? Yes. So if you say yes, revaluation reserve is there. If you have revaluation reserve, now impairment loss should not be transferred to P&L. It is supposed to be, what are you supposed to record? Revaluation reserve account debit to accumulated impairment loss account. Like this, you are supposed to do it. Got it? Yeah, you are supposed to reduce the revaluation reserve rather than charging it to profit and loss statement. Okay. So no, sir, we don't have revaluation reserve, sir. No revaluation reserve is in the balance sheet. Okay, not a problem. Then now impairment loss. This will be charged to profit and loss statement to accumulated impairment loss account. Like this, you are supposed to record it. I hope you understood. Right. So what is it? I mean, in simple to in a minute or less than a minute, impairment loss, what does it mean, sir? Impairment loss means we have some number in the balance sheet, but that is not actually the recoverable amount. Oh, what is that recoverable? It is not the actually recoverable amount. So if I sell it or if I by using it, I will not be able to get this much of money. Then why are you keeping that? It leads to overstatement of financial statements. That's why you're supposed to reduce it. If you reduce it, correct na? Then balance sheet में assets minus accumulated depreciation minus impairment loss will come. In the same fashion, correct na? In the same fashion, I mean, impairment loss should be debited or debited to P and L. No, it depends upon whether you have revaluation reserve in the balance sheet. If you have revaluation reserve, then debit revaluation reserve account. No, sir, we don't have revaluation reserve. Then you are supposed to debit. The profit and loss statement is supposed to be debited. I hope you understood. Perfect. So now the question is, what is the next question, sir? Very simple, my dear. The next question comes to, okay, right. Sir, impairment loss, you told all that correct. So what is that? When do you say there is an impairment loss? Very simple. Whenever your book value is greater Otherwise, I'll just do it. Whenever if you say, right, sorry, book value is equal to more than the recoverable amount, then there is impairment loss exist. Correct na? Right. So that is so simple. Correct. Now 1,000 rupees is this, 800 rupees is the recoverable value. Now there is a impairment loss. No, sir. Book value is equal to 800 and recoverable amount is equal to 1,000. Then obviously there is no impairment loss. Correct. Now there is no impairment loss and no accounting. No accounting is also required. No accounting. Nothing is required. Okay. Right. Let's go by one step. Sir, right, next question. Sir, whether impairment ka, correct na, whether are we supposed to test impairment? Impairment, are we supposed to test at every year in correct na? One question should come to your mind, no? Every year, whether the companies do this impairment, impairment testing. Impairment testing, when do you do? Right, when? When are we supposed to do the impairment testing? Very simple answer. Answer is straight away, no. Okay, right. So when do you do it, sir? When do you do it? There are some exceptions to this sentence. Whatever I am trying, I'll tell first one sentence, but later I'll give some exception to the list. Okay. Okay. So impairment test, when are you supposed to perform? Only when there is an indication. Only when there is, or there is any indication. Yeah, indicator. Okay, now indicator in the sense some symptom should come. Sir, I don't find any symptoms, sir. If you don't find any symptom, then you don't need to do impairment at all. Agreed. Okay. So indication means what kind of indications? Yes, standard only has given two types of indication. What is the first one? First one is equal to external indication. Next one is equal to internal indication. Yeah. What is external indication? External in the sense, this is not coming because of my usage of the asset or something. This is coming from outside. What is outside? Suppose ban of the product. Correct? Na ban of the product. That is because of the government rules and regulations. My company is getting seized. Could be correct. Na some calamities. Yes, calamities. Some problems are there. Correct. Na see COVID. Some issue has come. Is it because of you and me? Yeah. No, it is not because of you and me. Some environmental correct na. So government rules and regulations, correct na, calamities. I mean situations. I mean natural calamities. I mean to say some COVID and what do you say? There is a market issue. There is a, I mean market in the sense there is a lot of competition. That's why you are not able to get good amount of money. You're not able to recover good amount of money by using the asset. Could be correct. These are all some examples what I am giving, etc. This is not exhaustive list. This is only inclusive. Small examples I gave you. So because whenever you find such kind of circumstances, correct na? Yes. Then you are supposed to take care of it. You have to have a look at will I be able to recover this much of money? That is the basic question should come. What is internal indications are? Internal indication means some damage to the asset. Correct na? What happened, sir? What happened? My building is there. Assume some building is there. The building, some cracks have come. One wall fell down only. Some or other thing, some problem is there. Okay, some usage. Agree or not? Okay. So some issue. I mean, what do I say? Yeah, here I will say interest rates also. Okay, now interest rate change. So which interest rates are? Yeah, listen, my dear, interest rate. Then they can ask you in the MCQ question. Only long-term rates you are supposed to, long-term borrowing rates, Nana. Long-term borrowing or long-term investment rates. Long-term investment rates you are supposed to take it. They may ask you a question like long-term, short-term, something like that. MCQ. Yeah, see, the point is if you have the full knowledge, about the standard, let them give whatever they want. You will be able to answer it. If you don't, correct now, if you read it only for examination, solving the sums wise, then automatically you will get a problem. Agree or not? Yes. So that is what you are supposed to be very, very careful. Okay, try to get the full knowledge. Then it will be useful to well let them give whatever the kind of question you will be able to answer that. Okay, that is the primary important thing, right? So it may be because of the damage, it may be because of the usage, correct na usage, and so many other etc. I am going to tell you. So many other issues will be there. If you find any indication that I will not be able to recover this much of money which is there in the book value, then you are supposed to testify. Then only. Correct na? Sir, I found indications, sir. Whether external or internally, I found indication. Then what are you supposed to do? What are you supposed to do? You are supposed to formally find out. Yeah, what are you supposed to do? Formally find out What if I find out valuation? Formally, you are supposed to find out the valuation. Valuation in the sense that is nothing but calculation of recoverable amount is supposed to take place. Okay, calculation of recoverable amount is supposed to take place. I hope you understood. Okay, chalo. Now, yeah. So now the question is, formally we find out right, but there are exceptions to this list, my dear. What is exceptions are? Exception to this list, right? What do you mean by exception? Right. That means whether or not indication exist, whether or not indication exist. Yeah, whether or not indication exist, we must. Yeah, what are you supposed to do? We must check for impairment. We must check for impairment. Yeah, we must check for impairment. I hope you understood. Whether you find indication, do not find indication, but mandatorily under these two circumstances, mandatorily you are supposed to check. Okay, what is that? The first and foremost thing, if you have got the intangible asset, okay, if you have got intangible asset under development, in under development, if you have intangible asset under development, if you have studied accounting standard 26, then you will find intangible asset under development. Whenever it is under development, I mean, it is the development is not completed, it is not classified as an intangible asset, then you have to do it till the time it becomes intangible asset, because it is under development. Under development means work in progress, not yet completed. Mandatorily you are supposed to do it, right? That's all, Asad. That's all, my dear. Where the intangible asset life is greater than 10 years. Correct. Now, where the intangible asset life is equal to greater than 10 years. Because yes, rebuttable assumption of the accounting standard 26 is intangible asset life should be 10 years. But not mandatorily it has to be 10 years. It can be more than 10 years if you can prove it. Correct. Now, so, but if you have taken more than 10 years, you can take it. You can take it. No problem. You can take it. But if you have taken life more than 10 years, then you are supposed to go with that. What is that impairment checking? You are supposed to do it. All right. Sir, I have taken intangible asset life 8 years. Then you don't need to do. Only when there is an indication, no, then you are supposed to do it. Otherwise, you don't need to do it. I hope you understood. Okay, right. These are the exceptions. Sorry, sir. Then let's come to. So when I say book value, correct. Now, book value in the sense, book value is nothing but it is a synonym to the carrying amount. What do you mean by carrying amount? What do you mean by carrying amount? Carrying amount is equal to nothing but cost minus accumulated depreciation minus accumulated impairment loss, if any. Okay, if already I did in the last year also I did something, sir. Okay, let us say some 1,000 number, some 200 number, 100 number, then this is equal to 700 number. 700 is the book value, 700 is the carrying amount. Okay, this is clear, right? Then what is the next thing? Sir, you told recoverable amount. Yes, I told recoverable amount. Recoverable amount is equal to what? I told you net realizable value. Correct. Net realizable value or value in use. VIU, value in use, whichever is higher, I told. Okay, excellent. So what do you mean by net realizable value? Correct. Now, what do you mean by net realizable value? If I sell it, if I sell the asset right now, how much do I get? Correct now. By selling, correct now. What is that? By selling. By selling, net selling price. People will use net selling price. Net selling price is nothing, NSP. Correct now. Net selling price is nothing but net eligible value only, my dear. Only the wordings are different. Otherwise, meaning is same. Okay na. By selling, what is the amount? By selling, what do we recover? What do we recover? That is what net selling price. Okay, right. So what should I do? Say very simple, Amma. Do you have an agreement already? Already, correct. Now, do you have any already binding sale agreement? Do you have binding sale agreement? Do you have? You have to ask yourself. Have you already entered into any sale agreement, my dear? Yes, I have it. I have it in the sense. Then take that number. Binding sale agreement means I already entered into an agreement with you. I will sell this machine for 10 lakh rupees. 10 lakh rupees minus selling cost. Okay. And NSP means what? That is nothing but selling price minus selling cost. Net realizable value means selling costs are supposed to be reduced. Okay. Say this is equal to 1,000. This is equal to 10. This is 9. This is what? Either you say NSP or whether you say NRV. Sir, what is this 10 rupees, sir? 10 rupees is nothing but 10 rupees is nothing but we call it as incremental cost. Kya bola? Which mental? Incremental. Okay. Right. Yeah. Incremental cost. Yeah. What do you mean by incremental cost? Incremental costs are means I am incurring this cost only because I am selling. If I had not sold this, I would have not spent this. I hope you understood. So that means it is incurred. Correct? Na? That is, it is incurred. It is incurred only because we are selling it. We are selling. Correct? Na? I mean, other way around, what can I say? If not sold, correct? Na? If not sold, we would have not incurred. We would have not incurred. I hope you got my dear. If I had not sold the asset, I would have not incurred. Yeah, suppose some what will happen? Maybe some basic question. Correct. Now, one machine is there. It is already fixed to some. It is already fixed to the land or something. Now, okay, right. Now, if I because I'm selling, I'm supposed to take it out. I should be making this available to the buyer. Agree or not? So yes. Not only that, sometimes what will happen? If you want to sell it, some taxes or something you're supposed to pay. Could be. I have to pay to the broker. Why are you paying to the broker? Because I decided to sell. If I had not sold it, I would have not paid. Only those costs are supposed to be reduced. That is only selling cost. What are we talking is selling price. Selling price ka related if you have got the binding sale agreement. If you have binding sale agreement, take the binding sale agreement minus selling cost. You are supposed to reduce it. Correct na? Then you use it. Okay, right. Sir, do you have the binding sale agreement? So no, sir, we don't have any binding sale agreement. Not a problem. Correct na? Right. Do you find an active? Correct na? Do you find active market? Let me erase this. Yeah. Do you have active market? Do you have active market? Right. For this answer will be what? Yes can be there. No can be there. Sir, yes, sir, active market is there. What do you mean by yes? If I say yes, active market is there means what does it mean? Active market, people are buying selling such kind of asset in the open market. Okay, then take the value. Correct na? Take from the market. Take from market same asset somebody has sold it. So that means even if I sell also, I will also will be selling for the same amount. No, I am not here to lose something, right? Exactly. So if you have active market, take that price. Perfectly all right. Take it from the market and then you are supposed to cut the selling cost. You are supposed to cut it. Sir, there is no active market for myself. Okay, then you go for valuation. We will say go for valuation. Yes, you have to get the valuation done by some valuer. Yeah. So then he will apply so many methods of valuation because they know that, I mean, what to apply, what not to apply. Let them decide. We should not decide all those things. Agree? This is about NRV. So, chalo. Let's go to the next word, my dear. What is our next word? Next word is equal to value in use. Okay, sir, value in use. Sir, value in use mean what will be there? Value in use means how much do you derive by using the asset? What is the value of it by using the asset? So value in use means what, sir? Value in use nothing but, my dear, present value. Correct? Now let me write it in full. Okay, present value of future operating cash flows. Future operating cash flows. Yeah, future operating cash flows over the useful life, over the useful life of asset. Okay, over the useful life of asset. So that's all. Not that's all, my dear. Plus, correct na? I may be using it for 5 years, 10 years. Afterwards, will I be selling the asset, my dear? Obviously, I'll be selling. So that's why we are supposed to take present value of residual value, present value of residual value of asset. Yes, you are supposed to reduce it. Correct. Now, present value of residual value of the asset also you are supposed to take it. Got it? Right. Exactly. So present value of the future operating cash flows over the useful life of the asset plus present value of the residual. Correct. Now, it's a simple thing, my dear. Suppose life of the asset is equal to 5 years. Correct. Now, this first line will be talking about means what? 1 to 5 years time by using the asset operating cash flows. Correct. Now, be careful, my dear. I used the word operating. Correct. Now, have I used the word financing cash flows? No, 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 no. Financing cash flows, you are not supposed to. And investing cash flows also, investing also you are not supposed to. These two things you are not supposed to use it. Okay, only operating by using by operations. Yes, you are supposed to use it. And correct. Now, what the present value of residual value means what? That is at the end of the fifth year. Only what will come by selling the asset at the end of the fifth year. No, a number you are supposed to take. That also you are supposed to bring it to present value. Okay, right. So what does it happen, sir? Very simple amount. You are supposed to do like, I mean, I don't expect like this calculation in the exam hall, but okay, just I'm telling you. Okay. Yes, you are supposed to, like, if you remember in financial management, if you are doing the group 2, I think, okay, if you are doing the financial management, my dear, okay, financial management paper, if you are doing it, I hope you understood. If the financial management paper, if you are doing there, capital budgeting one chapter is there. Yes, that same thing you are supposed to do it. Okay, so what do you do by using? I will be making the sales. Yes, I will be making the COGS. Correct, my cost of goods sold will be there. Will you getting some operating expenses, my dear? Yes, I will get the operating expenses. Correct now. I told you cash flows. That's why what are you supposed to do? We will do the depreciation, non-cash flows also will do it. Because am I supposed to get the profit, my dear? Profit after depreciation. Then what do you do? I will get the tax deduction. Correct na? Right. Then I will get the profit after tax. Then I will do once again, correct now. Whatever the depreciation I have reduced on the top, that is supposed to be added back. Correct na? Then this number is called cash flows. This number are called cash flows. Correct. Now some number will come for all the 5 years. This is the first point. Present value of the I mean cash flows. Cash flows we are talking, not the profits. Profit means non-cash will be there because there will be depreciation, amortization, written off something. Non-cash expenditure also will be there. That's why you should. But I don't expect this level of question in the examination. Okay, na? But okay. Then yes, you have to apply with the present value factor. Present value factor. Whenever I say present value, obviously, are you supposed to do the calculation of present value factor, my dear? Yes, you are supposed to do the present value calculation. By using what rate? I'll explain you that. Okay, say for the time being 10 percentage if I take, correct now, then we will say 0.909, 0.821, correct now, 0.751, 0.683, 0.632, something like that will apply. Correct now, we will get all this multiplication afterward. These are all the present value cash flows. I hope you understood. Yes. So like this, when I total it, this is my number. Yeah, like that you are supposed to take it. Plus, not only that, correct now, Wi-Fi ka residual value will be there now, my dear. Wi-Fi ka residual value. Sir, I'm getting 500 rupees at the end of the fifth year. Oh, is it? And what is the fifth year factor? Sir, fifth year factor is equal to 0.632. Multiply a number. So if I say this is equal to A, this is equal to B, correct now, value in use is equal to A plus B. Value in use is equal to what, my dear? A plus B. This is the way you are supposed to calculate. I hope you understood. Yes. Right. Then one more small point is there. Right. Some example may what some companies will do. Will try to explain you like this. Sir, I have got a land here. Okay. Right. Right now this land is rented out. Okay, it is rented out. How much am I going to get? Sir, I'm getting a small rental amount I am getting. Okay. If I do the valuation based on the, say example, what is the book value of this land? Book value of the land is equal to 1,000. Based on this rental income, if I do the valuation, okay, if I assume, if I do the valuation, say it is coming to 800 rupees only, it is coming, assume something like example purpose. So my recoverable amount is equal to 800, assume. Okay, 800. Now the owner may tell you like this. No, no, what are you telling? Why are you taking this land as land? No, this is a big, so many acres of land. Okay, we are going to construct one big, one ground only. So later when IPL people will play here IPL only, then I will be able to minting the money. Okay, right. We are going to start constructing the ground and the cricket ground here tomorrow only onwards. I mean, next year only we are going to start something like that. They will try to tell something, whatever they want to say, they will say. We can't stop, obviously. Correct na? Right. Sir, can I take correct na? So can I say cash flows of this my sales of correct na? Sales of IPL sales only shall I shall I take it here IPL sales, my dear? No, you should not take the IPL sales directly here. Why you should not take it? Are boss, where is the commitment? Correct na? As on 31st March. Okay, as on 31st March, say 2024 is the financial year end. As on 31st March, Correct na? Is it committed? Correct na? Is it committed? Committed in the sense not just information. Committed. Committed in the sense what board of directors have approved the proposal. Correct na? Have they approved the proposal? Yeah, if they have, sir, already approved, sir. Okay, if they have already approved the proposal, then it is fine. That's all. Have they started the work, my dear? Correct. Now, have they started the work? Have they started the work? See, at least after 31st March, before you sign the financial statements, have they really started working, constructing something? Sir, they just simply paper में बोल दिया sir, कुछ नहीं काम चल रहा है. Then don't take into account. Okay. Then what should I do? Then you should take only revenue from the land, not revenue from the ground. I mean cricket ground. No, no, you should not take the cricket ground numbers unless until it is committed by the people and unless until it has been started by them. I hope you understood. Right, exactly. So here you're not supposed to take. No, no, sir, they already started the work and etc. Then under the sales, correct na? Under the sales, then you can take IPL ka sales ka kitna paisa aayega करके ऐसा सोचो. Not a problem. But not only that, correct na? Sir, this paisa, let us say some 10,000 crore rupees I am going to get. Yeah, super. 10,000 crores you will get. I am not denying it. But but to construct the ground also you will be incurring some 10, 12,000 crores also or not. Yes or no? Correct. 10,000 crores will come only when you spend the money on the construction part. If you don't spend money on the construction part, how do you get 10,000 crores? Yes, sir. Sir, construction cost. Correct. Na? Construction cost. Construction cost expected. This is also expected. This is also expected. So 6,000 crore rupees is going to be construction cost. Oh, then value in use is equal to 4,000 crore. Like that, you are supposed to calculate. Hope you are clear with. Okay, right. Now let us say discounting rate. Correct. Now let us look at the discounting rate. Sir, which rate am I supposed to take it? Which rate am I supposed to take it? No, correctly speaking, no. In accounting standard 19 में we use the word IRR of the lease, IRR of the lease करके बोला. IRR of the lease. Correct? IRR of the lease. Right. Just a second, my dear. Yeah. See, I'm sorry, I forgot to inform this. Suddenly I remembered and I just brought it. Okay. Yeah. See, my classes are obviously conceptual oriented. Why it is, what it is, and with a lot of practical experience, what I have. Okay. In reviewing the financial statements of different listed, unlisted, and Ind AS financials and etc. So I have got some knowledge that I am ready to share it in by way of these Google Drive classes. Okay, my dear. So these classes, I'm very sure it's going to be helpful to CA final students as well as for CA inter students. That much I can give you a guarantee, right? So I'm sure, I mean, whoever have taken the classes, every one of them are very happy. I'll be inquiring, keep on asking them what the questions. Every question of theirs are going to be answered. Right. So these are all the classes, my dear. This is related to advanced accounting, and we are giving 365 days of validity and 1.8 views, and including the physical book. Physical book, in a sense, my published material that is advanced accounting made easy. Including that, we are charging 7,000 rupees. Okay, you can contact if you are interested. You can contact on any one of these two numbers. Okay, we'll guide you how to make a payment and how do we give the access. Generally, access will be given on the same day. Most probably, in the worst scenario, right, the next day it will happen. The day, I mean, at the same time, book also will be posted. Next day itself, it will be posted. We stay in Bangalore, so it will take. I mean, depending upon your place, it will take some number of days to teach the book. Okay, right. I can assure you about the conceptual clarity and 100% syllabus. And if you just follow my book and my classes, no, I don't think so. You need to follow some any other book. Okay, that will be more than it is more than sufficient. I mean to say. Okay, my dear. Yes. Chalo, let's go back to the uh, discussion. Okay, right. And so, right, what is that, my dear? So here, discounting rate, what should I take? Discounting rate, what should we take? It's very simple. What are you supposed to take, my dear? Discounting rate? Yeah, 1 second. Oh, yeah, that's fine. Yes, my dear. Discounting rate. First and foremost thing. Okay, right. What that is the return, rate of return. You are supposed to rate of return from the business. Rate of return of the specific business. Yeah, specific business. You are supposed to take the rate of return from the specific business only you are supposed to take, not from the overall company. Means what, sir? Means what in the sense, say this is the balance sheet. We have got some textile business. Okay. You have got some gold business. If you look at the Reliance company, 100 business will be there. If you look at the Tata company, 1,000 business will be there. Agree or not? Correct. So, but overall return of the company, you are not supposed to go by. Correct. Now, suppose sir, we are into entertainment business. Reliance Entertainment, they do obviously take care of some movies and etc. They'll invest. Yes, they are into everything. Exactly. So I mean, there is a textile business is there. There is a gold business is there. They take correct. So when you are looking at the impaired assets of the gold business, then gold business rate of return you are supposed to take it, but not the average of all the business. The specific business you are supposed to take it. It's very difficult for me to calculate like that, sir. Oh, is it? Then you can do what you can do. If you can't do, this is like a hierarchy. Hierarchy number one. This is not possible. Then you should look at second. Second also not possible. Then you should look at third. So third also not possible. Then you should look at fourth. So fourth also not possible. Get lost. First you have to follow. Correct? No, at least fourth you are supposed to follow. Got my point? Yes, exactly. So rate of return of the specific business, as I told you, that is not available. Then you can do WACC. WACC of what? WACC of the company. So weighted average. What is WACC full form? Weighted average cost of capital. Sir, can I follow weighted average cost of capital? You can follow, but at the same time, you have to apply your basic brain. What is it, sir? What is it, sir? Means, say example, my dear, WACC has come to 10, 15 percentage. It has come, but I can't apply 15 percentage for the textile also, textile asset also 15 percentage, gold asset also 15 percentage, entertainment also 15%. That is illogical. So then what should I do? What should I do? Suppose the entertainment business is very risky, high risky, sir. Oh, is it? Then you are not. Then what should I do? 15 percentage plus some 4 percentage add something. I mean, correct na? Sir, gold business is less risky. Risky ne? Okay, then 15 percentage plus 2 percentage. This is normal, sir, not that much risky. Okay, then I will take 15 percentage or minus also you can do. Okay, right. So that you are supposed to apply. You can't apply blindly one rate for all the assets of the company just because you have taken the WACC. So WACC also very difficult for us to calculate. Oh, is it? Then you can go by the incremental borrowing, not incremental. Yeah, yeah. Yes, yes. You can follow the incremental borrowing rate. Which one is the incremental? What is this incremental borrowing rate? Incremental borrowing rate means additional loan. Correct me. If I go for a loan afresh, how much does it? I mean, at what rate do I get the loan? You understand my point? If I go for a loan afresh, at what rate do I get the loan? Yeah, what rate you will get the loan? No, that rate is what the thing you are supposed to go with. I hope you understood. Yes. So that is. So otherwise, what is sir? That also very difficult. Okay, then at least you take the borrowing rate. Okay, na borrowing rate. Yeah, what is borrowing rate? Yes, you go and I mean, what is whatever you have got the loans, our loans. I mean, you have got some loans here, correct na? Our loans average rate you take it at least you do it. But when you are following all these things, no, you are supposed to keep. What are you supposed to keep it in mind? Keep the risk involved. I mean to say, if the risks are high, then you are supposed. If the risks are high, you are supposed to take the higher rate. If the risks are low, correct na sir? I have only one business, then doesn't matter. Then WCC is equal to same business ka information will go. My point is what? When you are doing for one company, correct? My company has got more than one business. Under that circumstance, I was telling you differently. Otherwise, not required. Okay. Sir, next one more concept. What is one more concept? Sir, I have got a foreign currency. Correct? Now, forex cash flows are there. Why forex cash flows are there? Sir, this asset is correct. Now, where is the asset? Sir, asset is located outside India. Okay, an asset is located outside India. Yeah, outside India. Oh yeah, I have got a factory in US. Then what should I do? Nothing doing. Correct na? Then you will be first. What are you supposed to do? First, you are supposed to get the cash flows. Get the cash flows in which currency, sir? You are supposed to get the cash flows in forex only, foreign currency. But foreign currency ko what are you supposed to do? Your books are in India, na? Right. Obviously, books must be in rupees only, na? Yes, exactly, sir. Books are obviously in rupees. Everything is in correct, na? Okay, okay, okay. Super. Then what are we supposed to do, my dear? Get the cash flows in forex, we told. Correct. Then what are you supposed to do? First, you are supposed to convert. Convert using what? Convert using the rate on the balance sheet date. Rate on the balance closing rate, I mean to say. Balance sheet date. Yeah, balance sheet date, whatever the rate, that is the closing rate. You use the closing rate, my dear, then you will be able to multiply with. Correct na? Then that numbers you are supposed to take the present value. Correct na? Sir, shall I forecast what will be the currency? Correct na? Forecasting of forex rate. They will give you an example. They will try to do the forecasting. No, my dear, forecasting is not applicable. You're not supposed to do the forecasting. The present value, correct na? Then this number only you are supposed to, this number only you are supposed to do the present value. Then okay, then you are supposed to compare it with the NSP in the sense NRV. Then you will derive the recoverable amount. Once you derive the recoverable amount is going to be compared with the book value. Correct na? Then if the book value is higher, then there is an impairment loss. If the book value is lower, obviously there is no impairment loss. That's it. That is very simple, straight information. Okay, right. This is what the basic thing. What is the basic thing you mean to say? Basic, I mean, if there is an individual asset. So far, what is that you have done? So far you have learned the impairment, correct? Na? Impairment of what? Impairment of individual asset. Okay, impairment of individual asset we have done. Correct. Is it done now? No, it's not 100% complete. Then what is the next concept? Next concept is what? CUZ, cash generating CGU, correct? No, sorry. CGU, cash generating unit. Yeah, cash generating unit. Yes, let us do it in the next session itself. Okay.